Thanks so much for joining us. I'm Marlin Bohling with you with a look at your ag commodity trade on a Friday. And we're going to be joined this time around by Scott Gecas. He happens to be with Longleaf Trading, and he's speaking to us live and direct from the edge of the trading floor in Chicago. Let's go there right now and welcome him to the program. Scott, thank you very much for joining us here on the show. Just as you were coming up to the platform there, and you and I were talking during the break, getting ready for this particular segment here, you said there was a little bit of breaking news hitting the floor there. Maybe not necessarily directly related to ag commodity trade, but it could have a spillover impact. What was going on?
Yeah, as you see, walking up, you've seen oil prices spike ridiculous. You know, a lot of volume, a lot of movement to the upside. Venezuela came out and said they were cutting their output by 600,000 barrels. That's going to put a lot of pressure to the upside. You know, still a lot of looming factors with oil going in with this Iran news. So we're going to see how that plays out. We're still waiting for some announcement coming out of the White House with, you know, in terms of the Iran sanctions. You know, it could come out at any moment. Probably sometime next week, hopefully not over the weekend, at least give traders a little time to react to it.
Okay, right now we are showing June crude oil on West Texas crude now at $69.81, and not very far under that $70 benchmark there that a lot of folks have been talking about. What's it doing to heating oil or diesel fuel prices? Well, we can take a look and see if they're following suit here on the NYMEX. We have the June contract, 4 cents higher at 215.4 per gallon. So thanks for pointing that out, Scott. I appreciate that a lot. Let's see if it's having any spillover impact. Of course, corn is used to make ethanol, which can kind of ride on the coattails of the crude oil market. You know, we have the May corn now 1/4 cent higher, but it's in delivery. July now down 1/2 at 407.5. December down 1/4 cent at 422. So it doesn't seem to be spurring the corn on in any way at this point. Let's look at soybean markets and see what's going on there. We have July soybeans down 11 1/4 at 1042. Still a dime, almost 11 cents off our overnight high. We have November down 7 3/4 at 1041 3/4. And I wanted to point out the soy meal market, if I could. Soy meal sometimes will kind of lead the soybean market higher. It is under pressure today. And July soy meal currently down $4.40 at $394.20 per ton. You mentioned earlier while we were talking, Scott, about the negotiations going on in China right now. Is that going to be a make or break thing here on the grain trade, or is it going to be focused more on weather and the upcoming crop production and supply and demand report next week?
Well, fundamentally, I think everything's going to be focused on the weather. Everything coming out left and right is going to be focused on the news coming out. I don't think it has too much impact. You are seeing China canceling some of the sales of soybeans. I think that's one of the reasons for the drawback. You've seen soybeans spike last night right before the close. It came off overnight. As you've seen today, it's still moving a little bit lower. But, you know, fundamentally, you know, the soybeans market is still pretty strong. There's still a strong demand for it. Cumulative sales are about 98% versus the 5-year average. You know, that 1040 mark is going to be a main focus for what we're looking at.
Okay, I wanted to take a look here as well at what's going on in the wheat trade and then the cotton market too. On the wheat in Chicago, we currently have July down 8 1/2 at 529.5 per bushel. That is off its earlier high last night by about 8 cents or so, but it has bounced off its low by about 6. We're down 8 1/2 from our close yesterday. Meanwhile, Kansas City wheat, now that the wheat tour is done, it's taking back a lot of what it had added on during that tour. July KC wheat down 12 at 555 3/4. Meanwhile, on the Minneapolis trade, we have that July contract on the spring wheat market down 6 3/4 at 623 1/4. On the cotton, we currently have the July contract now quoted 37 points higher at 84.87. We'll come back in a moment and we'll talk more with Scott Gecas about our livestock trade when we return right after this. We are talking with Scott Gecas of Longleaf Trading in Chicago right now, and we're going to focus on the livestock trade, where, Scott, on the cattle market side of the equation here, we have not seen much in the way of follow-through action from the higher market activity that we've seen here for a couple of days. It started out a little firmer, but it didn't hang on very long at all. How come?
Yeah, I mean, with the cattle market, I don't know why we haven't had that continuation to the upside. It's still waffling around that 106 level. You know, we still have that gap to fill up to 110, but you're starting to see the weights come in significantly. You know, it was about 856 versus 867 versus the last week. So production's still up about 5% versus last year. Cumulative sales are still up about 14% versus last year. You know, beef prices are the highest since June of last year. So you're still seeing that demand for beef, and we're going to see if that is priced in for the cycle with going into the summer months. We're going to see how that's going to have an effect, but I do expect some profit taking to come off just across the board, you know, going into Friday. You know, going into the end of the day here today.
I was just going to ask you about that. If you thought that would be a key feature today to take a little bit off of the table here ahead of the weekend here, and maybe that is what we're seeing then.
Yeah, that's what we're noticing here at Longleaf. So.
Okay. Now, I did notice on the wire the Packer bids have actually maybe firmed up a little bit today. We see bids out there in the country of 126 to maybe a top end of 128, even though the asking prices are maybe 128 or better in the south, and it looks like about 200 in the north today. Let's look at our futures, and we'll go to the live cattle board here first and get you updated. After posting a high on June of 107.10, we're now at 106.08. So we're down 44 cents on the day. We have the August contract down 27 at 105.25. So they are lower, but admittedly not by a whole lot, though. We currently have feeder cattle. Let's take a look over there and see what they're doing. They have come off of their highs of the day as well. May feeders down 15 at 140.65. We have the August contract a dime lower at 146.48. The new beef cutout values just came out, Scott. They are a little bit higher today. We have the choice cuts gaining about 39 cents in value on the mid-morning update. They're priced at $227.95 now, and selects were 36 higher at $209.53. So both of those firming up, just as you mentioned. The demand still continues on the beef side. Fairly impressive so far this spring. Now, if you look at the pork cutout values that just came out, they had turned around from being lower yesterday afternoon to higher this morning on the mid-morning update. $1.47 higher on the pork carcasses. That puts them at $70.86. Belly market up almost $7, up $6.91 today at $92.19. So a big leapfrog jump for those. What about the lean hog futures? What are they doing today? Now, there was some concern over the lack of a Chinese trade agreement yesterday that thought maybe the lean hog trade would really struggle as a result of that. Let's go ahead and refresh that screen. The lean hog prices are not coming up here for some reason. Anyway, lean hogs, I was looking at just a short time ago, they were actually up a little bit, about 30 cents or so. So what do you think is the future here for this lean hog trade as we come into the weekend and then come out the other side here next week? Because they're really struggling to hang on to support.
Yeah, we're going to see if the spring demand is going to stay where it's at, or if it's priced in, or how it's going to be moving forward. But one thing I wanted to point out is the exports coming out of the U.S., I mean, they're at all-time highs, and they're up 3% versus last year. So there's still that strong demand for pork across the board. So we're going to see how that is going to play out in the next few days here.
Okay, well, good to visit with you, Scott. I appreciate all the help today, and did yeoman's work as always. Thank you very much. Scott Gecas of Longleaf Trading, and he's located right there in Chicago. So, Janet, that's the latest activity there. The hogs hanging on to small gains on the day.